Hey traders, Todd Gordon here with TradingAnalysis.com. This is for CNBC's Trading Nation. Traders, we're going to take a look at a setup today in EWW. This is the ETF that tracks Mexico. See, last Friday, the Mexican currency as well as the stock markets took a big hit when the news of the FBI reopening the email investigation hit the wires. The Mexican ETF, EWW, is in a technically weak position, and as Trump is closing Hillary's lead, it could continue to weigh on this product. So this is not a political trade. This is a valid technical setup. Now, before we jump into the technical position of EWW, let's talk about the implied volatility levels. Basically, they're through the roof. Over the last year, they're only more expensive about 15% of the time. Said differently, they're in the 85th percentile in terms of a ranking of 0 to 100. It's very, very expensive here with all of the political news surrounding the Mexican economy. So you can take advantage of that very high implied volatility with a sale of options, and if you combine that with our directional outlook, which I believe will be lower from this technical setup, winds up being a pretty good trade. So as we look at the daily chart here, you can see that the stock has dropped from the 70s down into the 60s. Here through 2016, we've fallen into kind of a sideways triangle consolidation. And usually what happens is that triangle, once the consolidation resolves and breaks out, will resume the prior trend, which was down. So this is telling me the EWW is looking weaker. Couple that with oil prices that are struggling up around the $50 region and a stock market that I believe is very overbought. All those forces could press EWW lower. So what I want to do is not outright short this, but I want to take advantage of the very high implied volatility in EWW by selling a call credit spread. So what I'd like to do is begin selling calls just above resistance, and then we'd like to purchase a higher call, which creates our effective stop loss. Okay, so we're going to go ahead and look to sell about the $52 call, and we'll go ahead and buy the $53 call, creating a 52-53 call credit spread. For this trade, we're going to look out to the November monthly options. Just 19 days to go, which will obviously take us through the election. So we're going to go ahead and sell the $52 call. We're going to buy the $53 call. Altogether, we're going to collect 36 cents. That's the max profit we can receive, 36 cents, which means we're going to collect $36 per option contract, but risk $64. Now, why the skewed risk to reward ratio? Because we're selling a call spread that is several dollars above the current price, so we have a higher probability of success. That is what we pick up in exchange for the skewed reward to risk ratio. So let's go ahead and put the trade in at the mid price of 36 cents, and we're going to let that trade work. All right, guys, that is the trade for EWW in the face of a Mexican ETF that does not look very good here in that triangle consolidation. Be sure to follow us on Twitter at Trading Nation, and we'll update on this trade as well as all the other positions our traders are working. See you in the next video update, guys.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the eye right here to watch the latest from CNBC. Thanks for watching.